Well, hello and welcome to the Lending Podcast. We are your hosts. We got the infamous JB, and I am Jeff Jones here for you, coming from Austin, Texas. And today we are talking about a gift of equity in the home loans.
Gift of equity. What is it? How
What
it
is it?
works? Why is it important? How's it beneficial? So we actually have two of these transactions working right now. We felt like it was a good time to bring this topic to light. And the general idea here is you've got a familial relationship with a seller. You've got a parent that wants to sell to a kid. You've got an uncle that wants to sell to the nephew or niece. And we're looking at how does the buyer structure the loan the best way possible. How does the family member that's the owner of the property, give a kind of a financial benefit to the buyer, and we structure the loan the best way to get the sale done, get the buyer in the home, get the seller out of the transaction, and use the equity in the property as the down payment, which is a pretty creative way to do it. So
I think it's great.
yeah,
I mean,
cool.
a gift of equity, in our industry, a GOE, it is a little gooey.
It can
So, on
can
that
be.
note, what is the benefit of them doing that compared to like any other concession?
Yeah, and I'll give you the most recent example. So we just closed one this past week where the aunt and uncle own the home. They've owned it for a long time. Niece and her husband were living in the property. They'd been living in the property for a long time, paying rent. And aunt and uncle wanted niece and husband to own the property, right? And so they'd been paying rent. They've been living there, but they don't have the benefits of home ownership. They didn't have the
Right.
tax deduction. They're not getting the interest deduction. And so in this particular situation, we had a lot more equity in the home than what the aunt and uncle really wanted to sell the home for, right? They were willing to take less. It was their way of helping out a family member and trying to keep that buyer's payment as low as possible. We understand there's a budget concern here.
Hmm.
And so what we did is we looked at, okay, what is the property going to appraise for? In
Right.
this example, it was going to appraise for over $200,000, and the aunt was willing to sell the property to the niece for about 150. So we had about $50,000 there of equity that we could use as the buyer's down payment and to pay closing costs. So the buyer was able to essentially purchase the home from her aunt, not put any money, any cash into the transaction, and also not come out of pocket for any of the closing costs. And so what we did is just adjusted the sales price to make sure that the seller was getting what she wanted to get. She also had a mortgage on the property that needed to be paid off. It was very small, but we had enough money there to pay off the mortgage. The home needed a new roof. So we included the roof cost
Wow.
into the sale price. So they get to finance the roof. They didn't have to come out of pocket for any cash. A new roof helped the homeowner's insurance be lower, so that helped their payment be less. And so it was just an all-around win-win-win. And they're simple to do. It's not complicated.
Well, it sounds like you made a pretty specific, what do you say that, like a consultation that advises how to structure the purchase before it really gets like, this is the deal. So it's almost like
Yes,
you're architecting, you're helping to architect
100%.
how it'll be funded and what pieces need to go there with purchase price, the roof scenario and what's being covered for closing costs.
Yes.
So
And
it,
another recent example
yeah.
too was a mom who I believe she's in her 70s and has an only child, and the daughter is a client of mine. And so there are no other heirs to the property, and so mom wanted her daughter to have the home. So let's get the house sold. Let's get it conveyed to a family member. So it's easier on the estate planning in this example, and let's go ahead and get the ownership conveyed, to the next person. So there are many different ways or reasons that this might pop up. There's different types of loans that we can do. We can do it on a conventional loan. We can do it on an FHA loan. There's pros and cons to both of those. But really, our phone call usually goes like this. We get the call from the buyer or even a real estate agent that may have a friend who this is the scenario. The agent may or may not be involved because it's kind of a family transaction. Hey, my friend wants to buy his dad's house or
Okay.
wants to buy his uncle's
Yeah.
house or whatever it kind of shakes out. And so that's how it starts. And then we say, okay, well, what's everybody's goals? What's everybody's timeline? What does the seller want to net from this transaction? How much equity do we have? And then we kind of reverse engineer to some degree the loan structure
Right.
to also minimize the buyer's out of pocket cash if that's also the goal, which usually it is. And so the ownership can actually convey, and sometimes no dollars even have to change hands.
That's amazing. And this is primary and secondary houses. It's not
Primary
investment.
and second homes. That's correct.
Yeah.
This cannot work. This does not work on an investment property.
Mm-hmm.
So it has to be a property that you're owner occupying or using as a second home. Yeah.
Good.
So let's talk about a couple of different strategies. So when we look at a conventional loan, okay, and we've talked about this on some previous episodes, one of the things that we want to do is in this gift of equity discussion, is there enough equity to gift a full 20%?
20% is the
Right?
magic number.
20% is the magic number because it gets the borrower out of that PMI, right?
Right. The mortgage insurance.
Which we talked about. It's not necessarily always a terribly bad thing, but if we can do it, again,
Mm-hmm.
this depends on the seller's goals and the buy and the equity in the property. If there's enough equity there, then a lot of times a 20% gift is possible. If a 20% gift is possible, then it's just that. It's an 80% loan to value purchase. We do it as a conventional loan. There's no PMI. The buyer gets the benefit of maybe some better financing terms because their
Right.
payment's a little less. The seller's still netting what they need to net as far as the estate goes. Estate
It's a
planning.
less riskier loan for the banks.
Exactly.
Mm-hmm.
And we get a conventional. We write a contract up. We get a conventional appraisal done. It goes through the normal underwriting channel. The one caveat is we need to have a gift letter. So there's a
Those are
one-page
really,
form
really
letter,
simple.
very simple, that the seller says, I'm gifting X amount of equity,
Mm-hmm.
and that can also include closing costs in the gift of equity to the buyer. And then we put that in the file, and it goes through underwriting, and we close it just like it's any other transaction. And so the conventional loans may be a little cleaner. If there's not as much equity in the property, and depending on the borrower's credit score and income and debt ratios and all that stuff, we might do an FHA loan instead.
Hmm.
And the FHA loan is minimum 3.5% down. So that gift of equity, the equity in the property can be a really small number, and still this could work for a buyer to not, you don't have to have 20%, you don't have to have a
Right.
ton of equity. It could be a property that may only have 4 or 5% equity in the house. And so we just use what we have. The seller gives it to the buyer on paper. All that happens at closing. The money actually never changes hands. It's the equity's coming, the down payment's coming from the equity in the property, and we can close it on an FHA loan as well. So either way.
Man. So if you're ever buying from family members, it needs to be looked at.
Absolutely, yeah.
And if you don't, you're really missing out on some beneficial terms of a loan structure, right?
Yeah, and I mean, in that example, let's take just a $200,000 purchase. I know that's not like a widespread sales price number right now, but let's just use it as an example. 5% down of 200,000 is 10 grand, right?
Mm-hmm.
So if we have a seller who's selling for 200,000, if they're willing to basically sell it for 190, then that's what's kind of happening. They're using the $200,000 sales price as the contract price, gifting the 5%, which is 10 grand, which means that the $10,000 delta between the 200,000 sales price and the 190 loan amount, that's coming from the seller's equity. It's not coming in cash. It's just 10,000 less that the seller is getting, right? So that's how the formula works. It's all done at closing. And we structure it, of course, ahead of time earlier in the process. And it's a really great way to structure. It does need to be a family member,
or it needs to be a friend.
Yeah, it can't just be a friend. It needs to be, or a fiance, or obviously
domestic
an aunt and
partner.
uncle, or domestic partner. So there's a lot of family member relationships
or
that work
a domestic
in this example.
partner's family member.
Could be a domestic partner's
So
family member.
it does trail pretty far.
Yes,
but it has to be a relative.
Yeah, it has to make sense for sure. For sure, has to make sense.
Mm-hmm.
And again, it cannot work on investment property purchases, but it can work on a 2 to 4 unit. So if it's duplex, right?
Yeah,
you're buying a duplex from a family member, you can use a gift of equity, and there are some down payment requirements depending on how much the gift is, and we won't get into
for a duplex. Yeah,
we won't get into maybe all those guidelines and stuff today, but just know that there's a way, right? There's a way to do this and to convey a property from a family member to another family member and not have to come up with a lot of cash.
Yeah.
So Yeah, I know it's a kind of a quick episode, but we wanted to share this with you. We have two of these working right now, two clients, and again, one of them was a niece buying from her aunt. The other one is a nephew buying from his uncle. Totally unrelated
Yeah.
scenarios, but it really it's a mutually beneficial situation and fairly clean,
Yeah.
to make happen. So love to help you with it. Love to answer any questions that you may have, and if you have any further insight on this, we'd love to hear it.
Yes, please let us know. We love doing podcasts on what we're seeing in the market now. So if you have anything you want to hear about from us, please put it in the comments below and subscribe to our podcast, like it, share it, and we're happy to serve you out there.
Sounds great.
Thank you so
Take care.
much.
See you soon.
Bye.